Welcome to Going Green. From the traditional investment advisory services of banks to robo-advisors, you can now DIY, do it yourself. Tailoring your own impact investing strategy is the new kid on the block of sustainable finance. To talk about this, I am now joined by Tillmann Lang, co-founder and CEO of Swiss startup Yova. Great to have you here, Tillmann. So let me first of all ask you about your sustainability focus. Now, the definition by Global Impact Investing Network says impact investments have the intention to generate social and environmental impact alongside financial return. And this is the one you're using as well. So tell me about your sustainability focus.
Yeah, very much like you say, the way we define impact investing is just like gender. So it's about an investment that serves to help you with your own future by growing your wealth, but it also helps the society around you by having an environmental or societal return. And that is the kind of service that we offer with Yova. When we say impact investing, it means that you invest money that grows over time. It will grow your wealth, so you take care of your financial future. But at the same time, you can have a positive impact on the world. For example, by promoting a greener future, a more equal future, promoting human rights, this sort of thing.
And this all sounds very good on paper, but there are clear investment risks as well. So how do you rebalance portfolios in this current market volatility environment?
So our approach to risk management is actually identical to the risk management or the financial methods that private banks use. The only difference is that we've totally digitized it. So we apply modern portfolio theory, and we diversify all portfolios across a range of dimensions and spectrums such as geographies, currencies, company sizes, industry sectors, and so forth. So the kind of risk-return profile that you end up with in a Yova impact investing portfolio is totally comparable to the kind of risk-return profile you would get in a traditional fund or banking product. But with the main difference is that while you still have the same level of return, you can control for the kind of impact that you're having because you only invest in companies that you love. For example, to fight climate change, to promote human rights, whatever it is that you care about, that you value, because we actually let the customer or the investor decide what the values and the criteria are that they would like to apply to their investment.
All right, so let's talk about the costs now. And your minimum initial investment is 5,000 Swiss francs only. Doesn't sound like a lot. There is administrative costs of 1.5% per year. There are no additional costs. So how do you make money?
Well, exactly the way you just described. So it is true, the 1.5% management fee is the only fee we'll ever charge. There's no additional fee, not at the beginning, not during your investment, not in the end. It's the only thing.
Is it enough to cover your operational costs? How much staff do you have?
We don't have a lot of staff. So we have obviously a bunch of investment professionals, such as ourselves. But apart from that, we're basically a technological firm, a technology firm. So the reason why we're able to offer this at such low volumes, investment volumes at such low cost, is because we automate most of the process. So while we make sure it's a very human kind of investment experience, because you have an investment that has something to do with your life and your future, the way we set it up is in a purely automated and rule-based way. And that's why we're able to sustain or to offer this kind of service already for people that are not only the super rich, but everyday people like you and me that might start with 5,000 francs, a bit more, a bit less. We're actually working to bring down the threshold even more than that.
There are so many digital banks and asset management companies now exactly entering the same field. So I guess competition is not sleeping. How are you facing that?
It's right, competition is not sleeping. But we do feel like the service that we're offering is actually a one-of-a-kind service in the world right now. So we're the only company where you as an investor with a small investment volume, and I'm not only talking about 5,000 franc investments, I'm also talking about investment volumes such as 100,000, where this level you can already get a 100% personalized service. You have to remember that if you invest in a Yova portfolio, you invest in stocks, not funds, which means we can make sure you only invest in stocks that you love. So for example, if you don't want high CO2 emitters, we can make sure that no single company that you invest in hurts your criteria or is in contrast to what you want to achieve in the world. There's nobody else able to do that.
Let's talk about the mixture of stocks and government bonds that you offer for the personalized investment strategy. What is your stock selection and sovereign debt selection like?
So,
what's your selection criteria basically for those?
So in general, the kind of criteria that are applied are selected by the customer or the investor themselves. So if you can create your own investment strategy, your own portfolio on our platform, yova.ch. And when you do that, you tell us what you care about. So you say, for example, I want to live in a future where there's more green energy, where there's more electric mobility, where there's more gender equality, or where human rights are the normal way of doing business, yeah? Not just the good company way of doing business. And whatever you have selected, we then apply to the company that we select. So what we do on a constant basis, our investment universe of around 1,200 countries right now, we're continuously growing it, but right now we have roughly 1,200 countries. We, in real time, constantly assess them on a range of dimensions. And then once we know what you as a customer care about, we can apply your criteria to the companies that we've looked at and match them with your values.
But this due diligence process takes a long time, first of all, and needs a lot of resources as well. So how do you make sure that these investments are sustainable?
That's exactly the part that we've automated. So traditionally, that takes a lot of time and a lot of work because analysts do that manually. We've automated the whole process. That's exactly why we're able to offer it already for 5,000 francs and not 5 million, as you would be able to, what you would need to bring to a private asset manager to get this kind of service. So the way we do it is we look at data from a huge range of sources, third-party sources. Obviously, we look at what the company has to say about itself, but that is just one in range of many data providers. And what our engine does, our platform does, our technology does, is take that data and constantly reassess it, try to find gaps, try to come up with an assessment of, is this, for example, a green company? Is it a company that does something for the local community, for the global community? That's what our technology does, and it does it in a fully automated way. And we continuously update it because obviously the question whether your impact is good or not can change over time. So as a matter of fact, even the change over time is something that we can assess continuously and in real time.
So you need to be really fast in adapting your investment strategy as well. Tell me about your typical profile of a client and how many clients you have at the moment.
So when we started Yova, we actually set out to provide a kind of service that is open to everybody. So for us, it was very clear from the beginning that we want to be able to offer to people that are not only the super rich, because as it turns out, the super rich actually have access to impact investing and they can use these kind of methods that we now provide. So our investor can be anybody from, say, a millennial that is in its first job for the first time, having income that they want to invest for the future, as well as a baby boomer that is planning their financial retirement or the next upcoming years where their income situation might change. Typically, our clients are people that might be well off, but that are not always super rich. Some of them are just starting to grow their wealth. So for them, the return part of investing is very important.
You previously worked at consultancy McKinsey, and also you were a director at the Sustainability in Business Lab at the ETH of Zurich. How did the idea of Yova come about?
In my work, I've always focused or been very interested in sustainability topics. And my professional career has been focused on topics like how to decarbonize energy and the economy and these kind of things. And as a private person, I've always been super frustrated with the ways I had to, the offerings I had to invest my own money. So if you go to a bank, you end up with very standardized products that, if you look into them, are not sustainable at all. You have a lot of intransparency. You don't know who takes which kind of fee, and you never know actually how much you're paying. And there was actually a study that came out in Financial Times this year that showed that for a retail investor like myself, a retail investor being anybody investing less than $1 million, the cost of investing in a traditional fund is usually up to 4 times higher than what you're told at the beginning. So I always found it immensely frustrating. I wanted an investment where I can control what I invest in, what I don't invest in, that promotes the topics and the companies that I love. So as a private person, I've started to find my ways of doing that. And then over time, I noticed that together with my friends that are now my co-founders, that actually many people have this problem. Many people are frustrated with the offerings and that they don't get a good investment service.
And also, Tillmann, I mean, at the end of the day, it's your financial loss because you made an investment mistake, an error, and it's not your bank advisor, right? So it's your own mistake, basically.
Well, if you do it completely yourself, yes. But that's actually something very important to realize about the approach that we have. We think, given that our clients are the not super rich, the financial security and the risks are actually super, super important. So you always invest in a well-diversified portfolio. It's not like you take a bet on green energy or a bet on electric mobility. We make sure you have a risk-optimized, well-diversified portfolio while still controlling for the bad effects of investing that you want to avoid or the good impact that you're trying to give to the world.
Now, with your online tool where you can set your financial goals and targets and design your impact investment strategy as well, what are the risks of cybersecurity? I mean, you need to have a system that is really bulletproof, right?
Yes. I mean, obviously, as an internet company or a technology company, we have to take these risks very, very seriously, and we do. So, for example, we store all our data in Switzerland on Swiss servers that are highly secured. We are, as I mentioned earlier, a highly tech-driven company. So apart from the investment expertise and the sustainability expertise that we bring to our business, we bring a huge amount of technological expertise. And a lot of that is around the security of data, but of course also of the investments themselves and the way we do things. So that is very high on our technology agenda.
How closely do you work with ETH Zurich, because you worked there before? Do you get any help, any support?
So we have very strong links, and among our advisors, we have leading academics from ETH, but not only from ETH, also from the University of Zurich, the Center for Sustainable Finance and Private Wealth, but also we work closely with the University of Hamburg, where there's a whole research group on sustainable finance. And we are in constant interaction with the academics from there to make sure that both the financial methods, but also the sustainability methods that we apply are state-of-the-art and are under constant scrutiny, because we really, really care about our value proposition. So we never want to offer a product that doesn't live up to sustainability expectations of our customers. And of course, it also needs to be live up to the return expectations of our customers and investors. So we are in constant interaction with academia to make sure that the science-backed approach that we apply always use the best kind of knowledge there is.
I would like to ask you a little bit about the reaction you're getting from the big banks in Switzerland now. Switzerland obviously is a banking country, and we have big, heavy, traditional lenders here in the country, but they must be scared of businesses like yours and young, aggressive startup companies, right? So what kind of reaction are you getting when you talk to them?
Oh, so we're getting many reactions. Whether they're scared, you will have to ask themselves. But I think in general, they are quite impressed with what we're doing and how fast we're doing it. And we get around one application per week from a former investment banker that is just saying, I'm actually moving out of the big banks. I'm so inspired by what you do. And I really hope that my expertise can help you do it more, because I think this is exactly what the financial world has been missing.
So you need to employ somebody who can take care of HR as well, in that case, an additional team member.
We might at some point, yeah.
Have you received any acquisition offer in that case by any, financial company or one of the banks in Switzerland? Not yet?
That's not at all on our radar right now. So right now we have a very strong team, and we have the backing and the network that we need to make this business real. And we're so convinced of our own growth story and the impact and business vision that we have, that we think we're the right people with the right resources and the right network to make it possible. So as a matter of fact, we just concluded a financing round where we brought in a couple of very, very strong investors.
Right. Your first investment round, you made about 2 million Swiss francs,
correct,
if I'm not mistaken. So what's next for your fundraising pipeline?
So for now, we're covered.
For how long? For 2019?
Yes.
Or beyond?
Yes. So, I mean, we're looking to internationalize in 2019. And in order to internationalize, we will need more funding, because we will build up operations in various countries, obviously. And we will try to bring the offering that we have to more people in more countries and more languages, with, of course, regional differences in what they care about more or maybe a bit less.
You have a PhD from ETH in Zurich, and also you studied computer science and mathematics in Heidelberg and Santiago de Chile. Where are you hoping to take Yova next on an international level?
So it's a good question, because we actually think the kind of offering we have strikes a nerve in many, many countries. So obviously for us, being based in Switzerland right now, which is a great country for us to get started, because people really care about sustainability. They're very, very open to digital models. So it was a great place for us to start. But starting from Switzerland, it makes sense for us to move into Europe. And actually, our team is from all over the place anyway, so we have quite a good ways of understanding the way customers tick in different countries.
So give me one or two country names. Germany, because you're from Germany, is up next?
Yes, yeah, I mean, Germany definitely is on our list, but we also think very much about Scandinavia. We also think very much, for example, about the Benelux countries, but we also think about the other large markets such as France, UK, even towards the south of Italy, of Europe, like Italy or Spain. We're thinking about that.
Thank you so much for joining us today, Tillmann, and good luck for your future.
Thank you, Martina.